Hi, and welcome back to another edition of Know Before You Owe. We have a very special guest today who is somewhat of a surfer in finance. What does that mean? He surfs the silver tsunami. Please welcome Brad Byrnes from Finance of America, a reverse mortgage specialist and a leader in reverse mortgages for a lot of our seniors that are going into that silver tsunami wave. So thanks for being on our podcast today, Brad. Appreciate it.
Yeah, no problem. Thank you for having me. Sorry about the technical difficulties with my camera, but I'm sure you'll put up a good headshot for me. And once again, thank you for having me. Anything that you are looking for as far as reverse mortgage opportunities. I mean, good news is there's a lot of equity out in the market. There's a lot of seniors that are in need. And the best part of it is we do have a lot of product now in this environment to really do help the seniors. So yes.
Let's talk about some stats, because I think once seniors hear the potential upside or opportunity to use this, they would be really excited to learn more about it. So in 2024, there was about 22,000 reverse mortgages that were completed. But ironically, the number of people that are probably qualified to get a reverse mortgage are probably in the thousands or millions, right? They're in a larger audience than we realize today. And a lot of times people don't know that 10,000 seniors turn 65 every single day. That amount of people is a substantial amount of the population and a substantial amount of people that need home financing. They're not going anywhere. So we got to figure out solutions to help them make a better long-term decision about their home ownership or where they're going to retire for the long run, right?
Correct. I mean, your stats are right. I've been in the reverse space since 2006. So, I mean, you've had this demographic out here growing, the 60, I'll say 55 plus population, because we start our programs at age 55. FHA starts at 62. Your stats says 65, which I get, but what really is, how can we help people, right? But yes, you have a huge demographic that is turning of age each day in that retirement age group. So let's call it that. And they also have a tremendous amount of equity. So fortunately and unfortunately, during this growth period we've had going back to mid 90s, late 90s, where you've had huge growth on equity and property, now these senior clients are going to be able to use that equity position to help with their retirement strategies. And so the question becomes, what's the best strategy to access equity to help short-term and long-term when it comes to retirement strategies? And in today's market, in today's atmosphere, Social Security, all those different things, we don't have large pensions. A lot of what we're going to have to lean back to is equity to bridge the gap. So we're coming up with as much products we possibly can that helps pivot this idea to how can we help seniors in the retirement age access equity, short-term, long-term, to, create a better retirement scenario, or what we call aging in place, the golden years, silver surf, whatever you want to call it, all those factors. Yes.
Absolutely. And we have two main factors right now that are anchoring people even more, right? They may have a low interest rate on their first mortgage, right? We know that most people, about 70% of borrowers who have loans have an interest rate below 4%. We also know that the needs of an aging client also exponentially go higher as you get older. So it's this really interesting dynamic where people are fearful or not confident that they have the right tools to make a good decision. They're not empowered. And a lot of misnomers are out there about reverse mortgages. The bank's going to take my house. I'm going to lose my house. My kids are going to have to pay my bills. There are so many misnomers out there about what the reverse mortgage can do for people. And it's our job in the communities that we live in to help really empower people to know the answers. And I like to look at the type of client we deal with in three categories. And tell me if you agree with this. When we have time, we love to talk about the planning of a reverse mortgage strategy towards retirement. So maybe someone's not retired yet. Maybe they're in their late 50s, thinking about retiring at 62, not sure what they want to do. That category is great to help because they're going to be the most educated to make that decision when they make it. The second category is the implementers, the people that are of retirement age that have now needed to get a reverse mortgage. Those are the active people applying for and getting a reverse mortgage loan. Those people are normally the ages of 62 to say 77, 78 years old. The last category are the people that did not plan, that are using this as an emergency crutch to get them through their big life events or maybe some short-term needs. And those people are the ones that I always get the most focused on to help people that need the money yesterday. So I look at them in those three categories. Is that a good way of looking at the ways we can help seniors?
Yes, I would agree with you. I mean, everything you said, spot on. There's different approaches to using equity, right? There's no limitations to how we can use equity. So it's a matter of when you look at it. My questions always, or my statements are, do you get insurance before the accident or after the accident, right? Do you start your retirement strategy the day you retire or before you retire? So those strategies are the same idea of how I use equity early, let it grow for me. And you've listened to me talk before about how I enjoy the concept of making a payment to a reverse mortgage. So maybe the idea is you get the reverse mortgage early before you retire. You're making payments to it like your traditional loan. You're saving maybe monthly, because your payment's less. But you have the insurance policy in the background in case something happens, right? That emergency fund is already in place. If something happens to me, one, I can access equity quickly. Or if I can't afford the mortgage payment because something happens that was not, we don't have the crystal ball, then I just stop making payments until I can rebound. Good news is we don't report to credit. We're not on title with you. We don't have prepays. We're not taking future equity. It's just we let the equity in the property now make the payment for us, the deferred interest side of it. Now, when you get back on your feet, you start making payments again. You start building that line of credit. You start building that, equity position back up again until you get to what you were talking about, where you're really like, okay, I'm done. I'm retired. I'm going to start pulling from my assets and I'm going to start using equity. And in that scenario, you still can use equity, what we call preserving your, I'm sorry, I'm drawing a blank, but when you have assets, instead of liquidating underperforming assets, you could use the equity position there, right? And bounce between asset and equity. So you don't want to sell off an underperforming asset. So you're basically insuring your assets now. So all the way through this, you can use equity early as an insurance policy against issues or harm or things happening, or later to asset preservation, right? To protect your assets. So there's so many different ways to use this product. And then you go in the last stage that you were talking about, the ones that unfortunately are in a position where something's happened, where their strategy didn't work out. And now they're what we call, unfortunately, the need-based scenario, where I have to get the reverse mortgage. I have to use equity because I don't have any other options. And that's really what we want to get away from. That is the last resort that we really don't like, but you have your equity, it's there. So a last resort is what it is. You've got to get access to equity to help the retirement strategy. Yes.
Absolutely. And we're talking about reverse mortgages help seniors leverage their equity and their assets to see the best way to carry the longest time frame to be able to have their lifestyle be met and their lifestyle needs. So this product is a reverse mortgage. And a lot of people are like, what does that mean? What's reverse mean? Well, there are forward mortgages. A forward mortgage, by definition, is one that has a principal and interest payment going forward to then pay down the amortization or the loan balance of that term of the loan. On a reverse mortgage, we're doing the exact opposite. We're deferring that payment and that loan balance continues to go higher. And that is sometimes the fear of a lot of seniors that don't know. It's a myth that they're going to lose their house if that balance of their loan ever exceeds the value of their property. And so the government has spent a lot of time, specifically FHFA, around the HECM product, which is known as the Home Equity Conversion model or mechanism or mortgage. And the HECM allows these seniors to feel comfortable that they aren't going to lose their property and that there are a lot of different ways, depending on their specific needs, to structure the debt. Some people, for example, won't need the debt today, but they want to have a line in place to be able to utilize down the road. Some people may have a current small mortgage and they want the ability to borrow down the road also. In that case, you'd have them be paying off their small first mortgage and give them either a larger first mortgage loan or a second revolving line of credit that grows with the equity. The third option could be something like, hey, I just want cash out to go live my lifestyle, stay in my property, and have no payment for the life of the youngest borrower that is on title. These reverse mortgages are primary residence programs. So you have to live in the property at least one day out of the year. So this is not meant to be an investment property situation where you're buying a bunch of properties and using reverse mortgages. Brad, can you tell us about like your average client you see from all your great partners? Finance of America, by the way, is one of the largest reverse mortgage lenders in the country. I'm proud to be a partner of FAR, and Brad and his team have done an amazing job for me and my team over the years. So thank you again, and share a success story of your team, please.
Yeah, I mean, you go back to a couple of hit topics you brought up. I mean, we do see a lot of seniors right now that have low fixed rates, right? Because we came off that low market. So they don't necessarily want to get rid of that mortgage payment, but they want access to some equity position. So we do have a reverse second that's been really popular the last couple of years, where they keep the first trustee at a loan, keep making payments to it, get access to equity, and a second trustee with no payment. So that's been popular. Going back to how you can use a reverse mortgage, a lot of what it is it's freedom, right? Freedom to make a choice. Freedom to have access to something that allows you to age in place, to, feel comfortable in retirement. That's what we're really looking at, is those freedoms to make choices based on what they need at the time. I always talk about using reverse mortgage like a traditional loan and making payments to it as you can. So it's not this one size fits all idea that, eliminate my mortgage payment, let my equity or my interest be deferred, let my equity make the payment for me. That's a choice, right? That's a freedom to have, but you also have the choice to make payments on these. You get a mortgage coupon each month, like a traditional loan, and you can make a payment to it. It can be less than IO, less than interest only, or principal and interest. It's now what we call that freedom based on where you are in your current situation. Then going back to our kind of normal scenario is, I'll go back to the equity idea. I'll see people that are really, really intelligent on how they use their equity. They'll take the equity position, not use it like we were talking about, but just have it an insurance policy in case of emergencies. They'll do what we call early inheritance, help their kids buy a home. So now their kids are growing their equity position and are in the market, right? Now they bought their property in early inheritance. They'll diversify and buy rental properties. There's so many different things that you can do with the equity position that there's no limit to it. It's just a matter of what is your vision, what is your goal, and then, wrap those ideas around the product. That's definitely something we do all day.
And as we age, as the senior ages, right, they're going to need more help to understand these products. Like my generation, we had email and phone and fax. Some of these older generations did not have the same capabilities. So there are some really good protections in place that protect seniors from a third party perspective. And that is normally what's known as a HUD, HUD counselor. These people are independent of everybody, the lender, the mortgage company, the real estate professional, the insurance company. Their job is to educate the consumer or the borrower on what type of loan they're getting to make sure they understand all the features. And if they have any questions about that solution, scenario wise, they can ask those questions. So I love that part of this process because I can't start an application until day 7, right? We have to let there be a cooling off period for people to really understand what they're getting. And another thing that people don't realize is that there are over 50 types of dementia in the world. People think there's one type of dementia. So as we age, we might not be as sharp as we used to be, or maybe have the same experience. And so just know we really want to take a hands-on approach to give all the information to not only the borrowers, but the heirs of that property, the estate of that property, to make sure everyone is empowered to be part of that process and understand what's going on here. One of the saddest things I see with a lot of scenarios I run into is that the kids don't want to, the kids, unfortunately, are looking at their best interests, not their parents. And then on the other flip side of that, I see the parents not being comfortable and being embarrassed to go out talk to their kids about the reverse mortgage solution. So my goal, I believe, is to bridge that gap and make sure that we provide all the tools. So like you mentioned earlier, Brad, the short-term and long-term goals of those seniors can be met. So that way you can live those golden years the way you want to and enjoy life, right? You've worked hard to have your house for the last 25 years or 30 years. You've worked hard to make that payment every month. You worked hard to have a job and retire. And now is the time to enjoy those benefits. So I really enjoy helping seniors equally as much as I do helping first-time home buyers and veterans, because to me, I get to be a vital part of that equation to make sure that their last loan is the right loan for their needs. So thank you for being a leader, Brad, in this. I know you run across several scenarios on an hour-by-hour basis. We're glad to have you on this call. What are the loan limits, Brad, for most of these loans nowadays? Because people also don't know about that. Can you share about the loan limits we find on reverse mortgages, either loans that are done through the government for the FHA program or maybe your own products?
Yeah, but before I jump into that, you always lead me into some good topics. So seniors are a protected class, and counseling like you, I agree with, is an amazing idea because seniors are protected. So they're hearing it from a neutral third party, the basic concepts of the reverse. And obviously it's protected because of other medical concerns that could be there, right? But it's not pass or fail. It's just a conversation that's had so they can understand it neutrally. The other aspect of children or kids and heirs, once again, everything is based on how you structure something. It could be a traditional refi. It could be investing in the stock market. It could be anything you talk about in the world based on your monetary involvement. It's a choice. It's how you structure it. If you get a reverse mortgage, it doesn't mean, oh my gosh, the heirs aren't going to get any money. They're not going to get the property. That's not true at all. All our loans are non-recourse. Nothing's paid or owed above and beyond the value of the property if it went upside down. But let's not go negative in that respect. Let's go to the point of it's a choice. You invest in the stock market. You use your equity. You hold money from savings. It's how you use the funds. It's not the program itself. It's how you use it. So if you were to use a reverse mortgage as an insurance policy and still make payments to it, then the equity is still there, right? So when the kids get involved and say, oh my gosh, no, that's my future inheritance. No, that's not. But also, no, this is just nothing different than me taking out a life insurance policy or some other insurance policy. The hope is that I never need to use it, right? That's the ultimate goal there. And then if you go back to the question you have is, what are our lending limits? We have products for 55 plus. We have first trust deeds, second trust deeds. We can go up to $4 million loan amounts on our first trust deed prop products. On our reverse second, we can go up to $1 million, which is very nice. So there's a product mix there to pretty much take care of everybody from age 55 up, to $10+ million home values. So there's a lot of product, a lot of opportunities there, and and more products coming in the market. We're going to bring more products. We have some stuff that we're just waiting to launch. So as the markets come down, hopefully we're all sitting here and listening and saying, okay, we hope rates are coming down. That will also be a positive effect across the board for all of us, reverse or traditional loans. Yes.
Absolutely. And it's just nice for us to have options and choices. So many seniors sometimes feel like they have no choice and no option in the matter. And I'm really happy that this product at least gives them a choice to consider. And maybe they decide that, you know what, this house isn't the right house to age in. It's 2 stories. The bedrooms are upstairs, or their kids live across the country, or they need special treatment or consideration. So the best part about this is it lets them get to that decision sooner so that they can make a very good decision. And that's the whole premise of the show. Know before you owe is the fact that I want to get the right professionals on to educate consumers and other professionals to make sure that they know of the choices available. They can learn from other people's success and mistakes, and also feel good about knowing that they have another person they can count on. So if you're working on getting a reverse mortgage, the best people to go to are the people in your local market. I've been fortunate to be one of those people. I love this product. I love helping seniors. And sometimes the right answer is, no, this is not the right product for you. But most times it opens up the door to have a conversation with your family, with your wealth advising team, with your personal goals to really get you on track so that you don't have to worry about a mortgage payment or financing when you're supposed to be, hanging out, walking on the beach, or enjoying a nice time up in the mountains, or spending time with your family, or going on a vacation. So I really appreciate your time today, Brad. I know you're a busy guy. You're an amazing part of my team. I really appreciate all the advice you give us and tools you give us to empower our local community around reverse mortgages. So thank you for your time today, and I really appreciate you being here.
Yeah, I appreciate it. And you hit on a couple more things, and sorry, but you're digging into some really good nuggets that I really appreciate you, putting out there. A lot of seniors feel like they're stuck in the family home, like you were talking about, where it's a 2-story, the property taxes are too high, the location's not right. What we rebranded it called right sizing. So you can right size into maybe a 55 plus community, more senior friendly, closer to your family. Maybe the kids have moved and you feel stuck because I don't have good DTI, debt to income ratio. I don't have great FICO scores. Well, reverse mortgages, we're not stuck to those ideas. So you can potentially sell the family home right size, use some of that liquidity to help with retirement, still buy another property and move into that new property with no payment. And now you've restructured yourself and you're not limited to that idea of maybe it's a better retirement state for yourself, or a community, or closer to your kids, or want to be close to the grandkids. You're not stuck. There's a lot of freedom to this. And I keep going back to that idea is freedom to choose, and it really opens up a lot of different freedom, a lot of different opportunities. So thank you for having me. I appreciate you and your business, but really it's just an opportunity, right? And it's always worth a look. I always say knowledge is power. It's worth the idea of getting that information, getting the knowledge, and then making an informed choice. Because like you were saying, it's not meant for everybody. It's not a program meant for everybody, but information and having correct information to make an informed decision, that's powerful.
I love it. Thanks again, Brad, for being on today. That's another edition of Know Before You Owe. Please know, like, subscribe, and follow us. And look forward to bringing you more great content like this. Brad is the Silver Tsunami writer of Surf Waves. So thank you so much for being on, and I look forward to seeing you soon, and see you next time.